Hello. Today I would like to talk about the impact of the oil price development on the short-term market. As all of you are fully aware of the fact that the oil price dropped considerably since March, and it picked up just in the last 4 weeks. In the past, this partly had an impact on the short-term rates, and as we have seen 40 to 60% oil price decrease over the past weeks. And today I would just like to show you on which trades this might have an impact or do have, and on which trade it does not. So therefore, what you do see over here, this is the global trends overview. And I have just chosen 40 feet high cube containers. You see the last 3 months, and at the moment, all the data you see is compared against 2 months ago. That means I compare the short-term market average prices from June versus April. And over here, you do see the current rate, which is for Far East Main, North Europe Main, roughly 1700. And this price is 12% up compared to April, although the oil price dropped heavily. I mean, all of you are fully aware of the blank sailings, which are imposed by the alliances. And that really means that on the majority of the trade, what we do see over here, all the measurements the carriers have taken do lead to the factor that the market is still quite stable, or even that the prices went up. Like you see over here, Far East Main, US East Coast Main is just a slight decrease, April versus June. Far East Main to US West Coast is up by 18%. Yeah, and this is all the trades where we predominantly see a quite stable short-term rate or even an increased one. There's just a few trades where we do see dropping prices, yeah, and this is from Mediterranean Main to Far East Main, and as well a little bit from Europe to Far East Main. But this is mainly related to the fact that the prices went up heavily as well in the previous weeks. So therefore, let me just go into detail for 2 trades. Yeah, let's start with Med to Far East Main. And as I said, this price slightly dropped, yeah, from April. But considering the fact that the prices went up heavily, I mean, those prices are still on an extremely high level. And therefore, this is just a slight adjustment downwards over here, where we come from a price level of roughly in April 1600, and now we're at 1430. Yeah, this is for the average, and the low end also slightly decreased from 950 to 880, but it's still same picture compared to end of last year, for example. The prices are twice as high as they have been last year. Yeah, so therefore this kind of drop is probably more related to the fact that the overall level is on a very high side, and this is probably not really related to the decreased oil prices. Yeah. The other trade, which is interesting then as well, is just as one example where we do see heavy increases, is Far East Main to North Europe Main. And we've shown this before. Yeah, the pre-Chinese New Year rush till January, prices dropped. And in April, we had roughly 1450, 1475. And then we have seen increases despite the dropping oil prices on the average short term in mid-May, and another increase now beginning of June. So that means currently the average on this corridor for short term is at 1700. And same picture when I show you the short term, this one is up as well. Yeah, where we talk about an average price of on the low side of 1350. Yeah, I don't know if a lot of you are surprised about this one, that really even when the bunker share of the total rate is going down, that the pure rate itself remains stable or even increase, so that the overall level is same or higher. Yeah. Reach out to us if you would like to know anything else, and I wish you a great day and speak soon. Bye-bye.